Jeff Spolstra with Summit Mortgage, and this is Mortgage Points. Down payment assistance. What is it, and where can I get it from, and how do I get it? That's a common question that I get. So let's talk about it. What is down payment assistance? Well, down payment assistance is basically additional money that is coming from an outside source, not a gift like from parents or relatives or something like that, but an outside organization that you can use to help pay for your down payment, to help pay for closing costs, or to somehow support your home purchase transaction. That's technically down payment assistance. Now, I'm going to separate that from something else, which is I'm going to call purchase assistance. Purchase assistance programs are programs that will help you make a purchase more affordable. One of the key ones in my area is called the BMR, or below market rate, or sometimes below market price programs. These are programs where homes are sold substantially below their market value in order to allow people who wouldn't be able to afford them at full market value to be able to make a purchase. Now, that's not down payment assistance. That is pricing assistance, if you will. The prices are being altered so that the units become affordable. I'm going to cover down payment assistance programs in this video, and that, as I said, isn't a change in the purchase price. It is being able to get money from an outside source to help you purchase a standard home at its market value. All right, down payment assistance. There's two fundamental types. One type are grant-based programs. These are programs where you're just going to be given the money, right? They might come from the city that you're buying a home in, or the county, or the state, or your employer, or a special interest group, or a lender may have a specific program. And they're just going to, you apply for the money, and if you qualify, they're just going to give you a grant. Now, those grants are oftentimes not large. We're talking thousands of dollars, not hundreds of thousands of dollars. So, for example, the local realtor association where I live was offering a $10,000 grant to people who qualified as a first-time buyer. There are other programs, lender, the Fannie Mae organization. If you qualify as a very low income purchaser, they are offering $2,500 grants for your down payment and closing costs. So we're not talking large sums of money, but especially when it comes to meeting closing cost requirements, they can be very good. The other primary, most prevalent form of down payment assistance are in the form of liens, second loans that are going to be attached to your property in addition to your primary mortgage. We call these silent seconds because you're going to have a primary mortgage that you'll be making payments on, and you'll have this additional loan attached to your property that is associated with the down payment assistance you're getting, but you'll basically forget about it. You're not ever going to make payments on it. You won't even remember that it exists until you go to maybe sell or refinance your home, and then it will be there, and then it will have to be taken care of. But they're called silent seconds. Now, the advantage of these types of programs is you can get substantially more money, maybe even a full 3% of your down payment, or 3.5%. Could come from these down payment assistance programs. In fact, there's one in my area that's offering up to 30% as a down payment assistance program. So there's a substantially more money involved, and that's why they tend to be more popular, because they do provide better funds. Now, what about these second loans? Well, so they can be anywhere from, some programs offer forgivable loans, right? You get the down payment assistance, and then if you make 5 years of on-time regular payments on your primary mortgage, they will forgive your second mortgage, the secondary loan. Or there's a graduated scale. The first year they'll forgive 25% of it. The second year another 25%. So after 4 years, 100% of it's been forgiven. There's those kinds of programs. Some of these second loans are interest-free. They're just going to sit there, and then they'll be paid off later. Some of them have interest or they accrue interest, but it's usually pretty small, like maybe 1% per year. Some of them might have a combination of interest and what are called equity share, so that you maybe have a zero interest second loan, but when you go to refinance your primary mortgage or when you go to sell, that secondary loan has to be paid off, and they're going to expect to take some portion of your equity gain as additional funds to continue to support the program, making down payment assistance available to other people. So, and that whether you do one or the other or both, it's kind of up to you. Equity share can be a big advantage because you might be able to get a larger down payment assistance, and depending on how long you intend to hold the property, it could all work out very well for you in the end. So that's kind of how the financing of those things work. These programs can be layered often. Maybe you get a grant from the city, or you get a grant from the local realtor association or some other special interest group, and we add to that a lien-based down payment assistance program. So these things can be layered. They can be added in. Just depends on specific requirements. Some allow it, some don't, under certain circumstances, et cetera, et cetera. So this has been sort of the general discussion of down payment assistance. In the follow-on video, I'll talk about some more specific programs, at least regarding California and the San Francisco Bay Area. Again, my name is Jeff Spolstra. I'm with Summit Mortgage, and this has been Mortgage Points.